Hey everyone, and welcome back to the channel where we dive deep into the world of hard-to-borrow stocks and potential short squeeze setups. Today, we're putting a unique spotlight on Global Interactive Technologies Inc., or GITS, a name that's been popping up on our high cost-to-borrow screeners. We're going to break down exactly why this stock is drawing attention, what the numbers tell us, and what you need to know. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on GITS Global Interactive Technologies Inc. This company operates in the communication services sector, specifically within internet content and information. Through its subsidiary, GITS is a technology-focused platform company based in South Korea, primarily known for developing and operating Faning, a digital fan engagement platform designed to support online fan communities, content discovery, sharing, and user interaction. With a current market capitalization of just $7.07 million, is firmly in microcap territory. Show chart, GITS price chart with recent action. Looking at the recent price action, GITS saw a slight dip today, down 0.47%. Over the last 5 trading days, it's down 4.55%, but zoom out to the last 30 days, and GITS is actually up 7.69%. Today's volume was extremely low, only 22,500 shares, which is almost zero relative volume compared to its 30-day average of over 1.3 million shares. What is cost to borrow and why it matters? Before we get deeper into GITS, let's quickly explain cost to borrow, or CTB for short, especially for our new viewers. When you want to short sell a stock, you first have to borrow shares from a broker. The cost to borrow is simply the annualized fee paid to rent those shares. Think of it like interest on a loan. Why does it matter? A very high CTB indicates that there's intense demand to short a stock, or more critically, that very few shares are available to borrow. When a stock is hard to borrow, it means brokers have limited inventory, and they can charge a premium for those scarce shares. These can easily exceed 100% on an annualized basis, reflecting the daily rate multiplied by 365 days. It's a huge burden for short sellers. Why this stock is hard to borrow right now. Now let's talk about why GITS has grabbed our attention. Our screener flagged GITS because its cost to borrow fee is an eye-watering 932.3% annualized. Highlight CTB, that is an incredibly high number. While its CTB momentum has softened slightly, decreasing by 57 percentage points over the last 5 trading days, meaning it was even higher previously, this fee still places an enormous burden on any short seller. What's driving this? Currently, there are only about 15,000 shares of GITS available to borrow across the market. Highlight shares available compared to its estimated float of 2.4 million shares. With so few shares available to short against a relatively small float, the demand drives the cost to borrow sky high. Our internal composite squeeze score for GITS currently sits at 42.5, which, while not extreme, signals a notable setup, largely driven by this extreme cost to borrow metric. Squeeze mechanics explained. So, how does this high cost to borrow relate to a short squeeze? A short squeeze happens when the price of a heavily shorted stock rapidly increases, forcing short sellers, who borrowed shares hoping the price would fall, to buy back those shares to limit their losses. This buying pressure then pushes the price even higher, creating a snowball effect. For GITS, if some positive news emerges, or if there's a sudden influx of buying interest, those short sellers paying 932.3% to maintain their positions will feel immense pressure. Each day they stay short, the costs mount. If the stock starts to climb, they face both increasing paper losses and escalating borrowing fees, often compelling them to cover their positions by buying back the stock, which further fuels the rally. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also signify that short sellers have very strong conviction that the stock price will eventually fall, and they are willing to pay a premium to maintain that bet. Dilution risk check. An important factor to consider in any potential squeeze setup is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can offset buying pressure, provide additional supply for short sellers to cover with, and often negates or severely limits any short squeeze potential, even if the cost to borrow is high. For GITS, our checks show no recent dilutive SEC filings such as -1s, -3s, or 424 BS in the last 90 days. We also found no recent reverse splits in our look-back window. This is generally a positive sign for a squeeze thesis, as it means fewer immediate headwinds from potential share issuance. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given the extreme cost to borrow for GITS, what should you be watching? First, keep a close eye on the volume. Today's volume of 22,500 shares is a tiny fraction of its 30-day average volume of 1,335,326. For any significant short squeeze to materialize, we'd need to see a massive surge in buying volume, indicating renewed interest and buying pressure. Second, monitor the borrow availability. If the 15,000 shares available continues to shrink, it could push the CTB even higher. Conversely, a sudden increase in borrowable shares could signal waning short interest or new supply. Finally, any news or developments from GITS itself, especially regarding its funding platform or other strategic initiatives, could act as a catalyst. Remember, despite the high CTB, GITS has seen recent price weakness over the last 5 days, suggesting short sellers might currently be in control, or there simply isn't enough buying pressure to force a squeeze. So there you have it, Global Interactive Technologies, Inc., or GITS, presenting an interesting setup with its incredibly high 932.3% cost to borrow and extremely limited borrowable shares. While the CTB itself is a huge red flag for short sellers, the current low volume and recent negative price momentum for GITS mean that the short squeeze thesis, while intriguing, is far from a guarantee. This is a prime example of how crucial it is to look beyond just one metric. High cost to borrow tells you there's pain for shorts, but it doesn't tell you when or if that pain will translate into a buying frenzy. If you found this deep dive into GITS helpful, please hit that like button, subscribe for more unique stock breakdowns, and let us know in the comments what other stocks you'd like us to analyze next. Thanks for watching, and happy trading.